You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is back to our old time here of noon Central, 1 p.m. Eastern. The perfect time to review some volatility. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Pleased to see so many of you are enjoying the slew of content hitting your ear holes these days on the network, not just vol views, but the option block and TWIFO and the advisor's option and crypto and everything else that's sneaking in there, the interviews, all the other good stuff we do here on the network. If you like what you hear, make sure you keep those reviews coming on wherever you listen to this show, Apple Podcasts, Podbean, Google's, Spotify, wherever the heck you get it, or our app in the App Store. Those work as well. A lot of you like to leave them there, or even growing number of you over there on the YouTubes. Either way, keep those reviews, those comments coming so new folks can continue to discover the program out there. And, of course, keep those questions coming as well. We do love to hear from you guys. And let's see who we're hearing from today doing double duty from the land of the pit, also holding down the MIAX hot seat this week. He is the greasiest of meatballs, soon to be the spiciest of chilies, the tastiest of briskets. Yes, he is Mark Sebastian from OptionPit.com. by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. How goes the countdown to Chili Town, sir?
I'm doing great. It's the best chili. I'm feeling the chilliest I've chilled in I can't remember. So super, super excited to be here.
All right. With the gang all assembled, then let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Let's do it. Let's dive right on into the vol review, the portion of the program where we break down what's going on the vol side of the spectrum. We're going to talk a little bit of VIX, a little bit of spikes, some of the futures, some of the options, a lot of the other products you guys like out there, your VXXs and so on and so forth. Probably some single name vol as well, still some of that popping off, as well as a bunch of other topics that fall under our radar, the trades, the trends, the unusual activity, all that good stuff. Let's kick it off. It's a bit of a mixed end to the week. We had a little bit of this going on yesterday where the day started off mixed, and then it kind of just turned dark and it turned to the south. Right now, we're still seeing things mixed. The Dow was up more, though, so it's given up some of those gains. It's up about 0.15% or so right now. So I think it was up about 200 points or so at one point earlier today. Now it's up about 42. So it looks like maybe the worm turning in the Dow. The worm has already turned in the other major indices. The S&P off about 10 handles, so that's about 1/3% or so. And then we got the NASDAQ off over 100, about 127 handles or so. So that's off over 1%. So the quote-unquote tech wreck, at least for the last week or so, seems like it's continuing out there. So maybe today can be another one of those days where we start off a little bit mixed. Maybe it seems like we could fight our way to the upside. And then wha-bam, to use a technical term, turning off to the dark side. Coming into showtime, we saw our old friend Spikes at right about 27 3/4. That puts it down pretty much exactly 5 handles from where it was this time last week. Don't see that too often. Of course, it ticked up right as the show started. It's a little bit north of 28, almost 28 1/4. So put it down about 4.5 handles now from last show. Similar story out there in VIX cash land. It was at about a 27 3/4 out there to kick off the show. That puts it about 4 handles down from last show. And actually, it's still kind of hovering right around there. So it's down about exactly 4 from last show. And our old friend VVIX, a.k.a. the volatility of volatility, is frothy. It's juicy, but it has come in a little bit since our last show. Down almost 8 handles, 7 3/4 handles, puts it down to 116.75. Shows how frothy vol got last week. A lot of stuff popping off out there. It's still active. Of course, we like to use that benchmark, that bellwether of 120 to the upside. We're like, that's where things are really popping off. But, you know, as the Rock Lobster pointed out earlier this week, this pandemic era has really kind of changed the frame of reference for which we view things like VVIX. Used to be 75 was kind of the lower bound, 120 kind of the upper bound, but pretty much the entirety of 2020, we haven't even come close to that 75 lower bound. I think the closest we got was about 86 and change, 87. And most of that time was really spent above 90, if not 95. So very different frame of reference this year when it comes to vol of vol. So maybe 120 is no longer the upper bound. It's kind of maybe the middle to lower bound in this pandemic era. And then when things get normal again, we'll go back. I don't think we're going to see a VVIX of 75 again anytime, certainly not before the election, which is what everyone is looking ahead to right now. Mr. Greasiest of meatballs, Mr. Tastiest of chilies out there. A lot popping off, a lot lighting up the vol tape to end the week here, sir. What is on your collective radar today?
Yeah, there's a lot of funky stuff happening. We actually saw the cash get over the September future trading today. We did see October all over the place. There's been, we're seeing call buying and big call spread buying in the SPX. A couple of huge call spreads went up in SPX today, actually. And there was a pretty decent sized VXX spread. There's just a lot of uniqueness. One thing actually that I thought was kind of interesting was that there was is how low GVZ is, which is gold volatility. There's been a lot of people digging in, trading gold and gold premium as a hedge against the U.S., quote unquote, printing money and against, the market risks. And here we are, and gold vol's about to get into the teens. So there's some real opportunity to go out and use some of the precious metals as a hedge. Trading as a whole, we're going to have a week where the market is down and vol is down at the same time, at least in the futures and in VIX. So that's, one of the things that has me wondering whether this next sell-off, could it be a kind of vol pressure comes off as the market slowly drops? And, it kind of sets up that way a touch.
What else is setting up that way are our old friends on the futures front. Of course, Spike's futures still halted, still waiting for a resumption, some news in that calendar so we could start ticking off the activity out there. That means V-Spikes or the forthcoming Viking Not ready for prime time yet as well, but hopefully we'll get that out to you soon too. More measures of the vol of vol are always good, even if maybe the naming convention can be contested somewhat. So we know what else is contested out there, and certainly juicy is the VIX futures term structure. We've said it before, we'll say it again. The answer to all of your vol questions lurks somewhere hidden in the mists of the VIX futures term structure. You have to kind of just be able to ferret it out in there. And coming into the show this week, it's interesting out there. We've been talking for a while about that bump around the election and how cataclysmically high it got. It was just a huge chasm between that OCC future and just about everything else around it. Then I was looking for a while there, like they were pricing in a lot of decent juice into the farther off months as well, something we've been talking about for a while, maybe pricing in a bit of a contested election. Seems like a lot of outlets are picking up on that now, even CNBC having a big write-up, I think, yesterday. Traders load up on market insurance on fears of a contested election, talking about the VIX futures term structure out there. Unfortunately, they're a little bit late to the party here, because looking at it today, it seems like a lot of that juice is getting wrung out of there a little bit. Of course, the cash is moving a little bit, and that kind of tends to obscure things a little bit. But compared to the last couple of weeks, the amount of premium out there in some of these far-off months, it has kind of eroded. Let's go out to SEP, which is right now pretty much at the level of the cash. They're kind of bouncing back and forth with each other as the cash continues to move. Cash is above it for a little bit, then they wrestle back and forth. So those two are kind of moving and kind of right around the same level, pretty much unched, which makes it about the same as it was this time last week. Now, the OCC future is where so much of the focus has been since January. Really, that one is come off quite a bit. It was 7 to 8 points not too long ago. It's about 5-point premium right now. That one's pretty much unched. That really hasn't changed much since last week. Nove, though, has gotten a little bit more this week. It was lighter last week. It's got about 1.5 points, so it kind of doubled. It's about 3-point premium to the cash. Again, the cash is a bit of a moving target right now, so you kind of got to take a snapshot and go from there, but that cash is moving all over the place. So that changed a little bit of our frame of reference, is that cash portion. Kind of juicy. But Jan future, that's what a lot of people were really looking and saying, wow, they're pricing, including myself, pricing a lot of vol all the way out to Jan. It was about 5 points and change not too long ago. This week, it's not quite a point. It's about 3/4 of a point out there. Now, once the cash settles down a little bit, you might expect to see a little bit more of that come back in. But that's nearly 2 points lower than what it was this time last week. So the Jan effect, the Jan juice that they were pricing in of this notion of a contested election, seems like it's getting wrung out a little bit in spite of what CNBC and others are going on about out there. Mr. Meatball, is that your takeaway as well? You think the cash moving so fluidly right now is also kind of obscuring what the heck's going on out there in the VIX futures?
Yeah, the VIX futures are really odd. We clearly still have the market fearful of, what's going to happen on election day. Whether we're going to have an answer by the end of November expiration is priced like that. November VIX futures expiration is priced like that is a real risk. Over 2 weeks seems like a long time for this thing to get rooted out, unless we have a combination of both a really close election and the some sort of mail-in ballot snafu and lawsuits and yada yada yada. That would be how we would get ourselves into some trouble around all this. But where I see value in the VIX futures in terms of leaning short is definitely that November and December contract, which I think are, personally, I think they're all overvalued. But, when I look at the whole curve, November seems to be a little too out of whack. Relative to, I think, the perceived risk, I think the curve is too expensive. I think, October is going to stay expensive just because of the election, but you got to ask yourself about whether it's truly going to take 2 weeks or 3 weeks for us to come up with an answer.
Got a little bit of your feedback going on in there. I'm hearing double marks, which is always a spooky thing. As we keep on rolling out into the options landscape, let's see. Of course, Spike's options still kind of halted as we're seeing all the futures waiting for the turmoil out there in the futures to subside, and actually the regulators to figure themselves out on the futures. So let's go on out to VIX options. Kind of a light day out there in VIX options land today. Not quite 250,000 contracts on the tape as of a few minutes ago, about 220,000. The ADV out there ticking up, though. It's about 408,000 right now. That's up about 22,000 from last week. Remember, we broke 300K not too long ago, got down to 299 in that range. So that's a little bit of a rebound. We have seen, of course, some decent paper as this sell-off has exacerbated and mitigated and gone back and forth over the past week and change. Going on out to the top 10, the big positions in the mothership in the VIX options out there. Still pretty light overall, even though that OI is starting to grow, closing in on 6 million contracts, about 3.5 million on the calls and about 2.5 million on the puts. But it still only cost you about 83,000 contracts to break into the top 10 in VIX land right now. That gets you to the SEP 50s, 5-0. Interesting strike to have in the top 10. You think that's interesting? Number 9 is even better. 87,000 of the Jan 150s. So a 3x jump in strike here for our number 9 spot. Number 8, back to more sane, level-headed strikes. 87,000 as well of the SEP 25 puts. Number 7, 99,000 of the Jan 75 calls. So we all the way up to number 6 here. Still 99,000 of the Jan 40 calls. And guess what? Number 5, also 99,000 of the Jan 27s. You got to go all the way up to number 4 to even break 100K. That shows how light things still are out there in VIX options land. That gets you to the SEP 21 puts. Then we go number 3, 104 of the October 25 puts, our only October on the top 10 this week. Number 2 here, $1.41 of the SEP 24 puts. Number 1 with a bullet out there in VIX land, 173,000 of the SEP 20 puts. That's a little bit more respectable volume for number 1. In the past, we've seen much more than that, obviously. Usually that's enough to probably break into the top 10, but hey, that's where we are right now. $1.73 is enough to get you on the top spot, the big dog out there in VIX options land. 50-50 yet again this week in the top 10 calls to puts out there. Read into that what you will as you look into the hot activity. Not a lot of hot activity really today. Like I said, about 220,000 contracts on the tape as of a few minutes ago. The most active contracts today, the SEP 24 puts with about 13,500 on the tape, and the SEP 32 half calls with about 13,100 and about 12,200 of the SEP 27 puts. Let's throw in a funky strike as well. The OC70 is also kind of active today with about 11,000 contracts on the tape, and the SEP 65s, 10,500. So an interesting diversity of opinion on display out there in the light volume in VIX land today. Yesterday, a little bit more on the tape. Remember, yesterday was that day where we kind of seemed like we were going to be mixed, and then the worm turned to the dark side pretty quickly. 304,000 contracts on the tape. Yesterday, the most active contracts yesterday were the SEP 45 calls with about 20,600 contracts on the tape. October 110s. Interesting strike selections afoot out there again. OC 110s, 15,500 of those bad boys trading yesterday, and the SEP 35s, 13,000, as well as 13,000 of the OC 90s. And that's not enough. We got 12,500 of the DEES 110 calls. Maybe this is what CNBC was referring to as funky upside post-election trading out there. Let's go on out to Wednesday. Wednesday, a little bit more paper on the tape, almost 400K, 396,000 to be precise. The most active contracts on Wednesday, 26, almost 27,000 of the SEP 26 puts. Then we got about 20,000 and change of the SEP 35 calls, 17K of the SEP 28 puts, and about 15, almost 16,000 of the October 40 calls. And then Tuesday, 459,000. That's pretty much the most active day of the week so far. And we've got, let's see, the most active contract on Tuesday, 42,500 of the SEP 27 puts, followed by 33,400 of the SEP 50 calls. Interesting, funky risk reversal, if that was the case. And the 32,000 of the SEP 25 puts, followed by 17K of the SEP 70 calls. Let's go some funky strikes as well. We also got 15,000, almost 16,000 of the OC 110 calls and 15,500 of the DEES 110 calls. So folks liking themselves a little bit of DEES and a little bit of OC funky strikes, let's put it mildly, out there on the 110 strike. Monday, of course, no paper on the tape, closed for the Labor Day holiday here in the U.S. So a bit of a truncated trading week out there. Mr. Meatball, anything lighten up your tape? And what are your thoughts on some of these funkier strikes moving onto our radar here, like the Ach and Dies 110, sir?
That was actually part of a big cash strip that traded for about $3 million. So they packaged all that October and all of that December into one trade, paying $3 million. And that is likely against some sort of over-the-counter paper that went up. That guess is that somebody put this on in the listed market because there is some sort of customer that this trader had to take the other side of that did something over the counter in the form of either a variance swap or some sort of knockout call option, something along those lines.
Yeah, I was going to say, those funky strikes, they have the whiff of variance about them. That's the kind of thing you see going up as a hedge against those bad boys. So that would certainly make a lot of sense out there. Aside from those funky strikes, any other prints this week catching your eye, or indeed the eyes of your crazies in the trading legion / pit chat, sir?
Nothing crazy in particular from me that really popped out at me. Which I was actually a little surprised about. Things were a little relaxed this week from a VIX perspective, other than that huge trade. And like I said, there was today a really large September call spread that went up in the SPX. Customer bought north of 10,000 of the 33.5, 34.5 call spreads. Paying $36 up to $38. One has to wonder whether that is in conjunction with some futures dumping, because that big trade took place just before markets started to head a little more south. So that trade was actually put on when VIX was at its lows and the market was at its highs. And you wouldn't normally think that would work in somebody's favor. But if you did that against a heavy short delta, that trade looks really, really nice, pretty fast.
What doesn't look nice right now are the major indices. The Dow has given up what was left of the ghost. Now all three major indices are in the red. Dow ever so slightly, but the rest of the indices starting to gain some steam, as Mark alluded to there earlier. S&P off about 0.5% now. NASDAQ off about 1 1/3%. And the Dow starting to figure out its way to the dark side there as well. So we'll check in. Maybe our vol prognostications will look a little better towards the end of the show out here. Let's move on out to another product you guys usually like to fade. That fade worked out pretty well so far this week, even though it's given some of that back. And now VXX coming into showtime was at about 26. That puts it down almost 6 handles from last show, about 5 3/4 points. It has gained some of that back since we started talking here. It's up nearly a full point. It's up to about 26 3/4. So you're down about 5 handles from last show. So, given some of that crazy juicy erosion back out there. Decent paper on the tape out there today, about 226,000 contracts. So far, the ADV has also ticked up quite a bit since our last show. It's up to about 286, pushing 300K out there now in VXX options land. That's pretty decent paper. That's up nearly 30,000 contracts from this time last week. What are the big prints out there in VXX today? Let's see, about 21, almost 22,000 of the SEP 26 puts on the tape, as well as about almost 10,000, 9,700 of the SEP 27 calls, and 9,700. Oh, those are expiring. Those are the regular SEP expiring the 18th, and expiring today, 9,700 as well of the SEP 27 calls. So maybe a bit of a roll, getting himself another week to go. The paper, the strikes, very similar out there today. And about 9,000 of the OC 32 calls out there as well. So a lot of calls dominating the tape today. Let's see, 1, 2, 3, 4, 4 of those strikes out there on the call side of the ledger, including the OC 43s as well, about 8,500. Let's go out to the top 10 out here in VIX options land. Let's see if that jives with the paper we're seeing today. Number 10 in VIX, VXX. Number 10 in VXX options land. 19K of the SEP 27 calls. Number 9, 20,000 of the Jan 22 puts. Number 8, 20,000. Oh, I almost forgot. Well, Mr. Meatball, I just said it. So maybe outside of the one I just said, if you'd like to play Where's Caldo, what is your guess for this week, sir?
Yeah, I'm going to say it's the 30 calls.
And what position do they have on our top 10, sir?
I'm going to say they're along the September, and it's number 6.
Not a bad guess. Actually, our Where's Caldo winner, like I just said, was the first one, number 10, with 19,000 of the SEP 27 calls. But beyond that, the actual Where's Caldo you are guessing for is number 4 with the SEP 35 calls out there. So a little bit higher this week than it has been in weeks past. So let's go to number 4. Number 3 then, 28,000 of the SEP 30 calls. Number 2, 29,000 of the SEP 23 puts. Number 1 with the bullet out there are the SEP 20 puts, 29, almost 30,000. Looks like our size put spread friend, our 30-22 put spread friend, hasn't really come back for the same amount of size. Maybe he's kind of keeping his powder dry as we're heading into the election. Maybe you think he's not going to get the same kind of juicy erosion he has in months past. It's kind of hard to fault him, even though this past week we saw a good amount of juice coming out there. Let's see really quickly in the top 10. 1, 2, 3. Once again, 70-30 puts to calls, the exact same ratio as last week in the top 10 for VXX, including interesting prints out here. Our buddy Mr. Dave Lincoln of Short Vol fame chiming in before the show saying there's a customer out there in VXX buying a 32-43 call spread in October, 5,000 times, pays $1.05 to open that. That would jive with the paper we just mentioned. That was the October 32s and October 43s have done about 9,000 each, close to it, 9,000 on the 32s and 8,500 on the 43s. Looks like he came back for more after Dave highlighted out there, roughly 2x out there. So, Mr. Meatball, A, what are your thoughts on this OC 32-43 call spread for $1.05? Are you a fan of that one? And then B, any other VXX prints or trades lighting up your tape and the tapes of your trading legion, sir?
Yeah, no, I mean, we were looking at a lot of different trades in VXX. One of the things that, we're analyzing is that, it might not do very much for a while with how big the October VIX future is. And then we were paying attention to this trade in particular. Yeah, it's a hedge and it is big. And that is probably one of the bigger trades we've seen in the product in a long time. And but that's the only major print that we're talking about today.
A little bit of upside dominating the tape. Everyone talks downside, and certainly it's warranted given what we've seen out there of late. But do you think there's something to that too as well, Mr. Meatball, that the size put spread guy in VXX hasn't come back yet? You think that's election-based? Maybe he made his money, he's sitting pretty? What are your thoughts on why he hasn't returned with more size 100,000 lot put spreads in VXX?
Yeah, I do think that's the case. I think he's going to be waiting till after the election because he doesn't want to spend a bunch of money to not win.
Usually a good philosophy. Don't spend a lot of money to not win. So don't go to the casinos. Stay away from the casinos. But it's kind of hard to fault that logic looking what the futures are pricing in out there. It doesn't seem like in the near term it's a juicy time for VXX to go to the dark side. But hey, over the past week, it has surprised a lot of people. What also surprising people out there is UVXY, the last of the Mohegans, continuing to truck along and doing decent paper out there. Coming into Showtime was at about a 21.5. That puts it down a whopping 7 handles from where it was this time last week. It has gained some of that back now. It's at about 22.75 right now. So back up about 1.25 from where it was at the start of the show. The paper out there, pretty decent as well. Let's see, the ADV ticking up yet again. It was up to about 152,000 contracts out there. That puts it up nearly 30,000 contracts from where it was this time last week. And first off, how many is trading out there? That is about 104,000 contracts on the tape out there. Another decent day out there in UVXY. I've got VXX on the brain here today. Let's look at what the hot prints are out there. What's lighting up the tape in UVXY today? Looks like about nearly 8,000, 7,400 of the SEP 22 calls dominating the tape today, the most active contract, followed by about 5,400 of the SEP 21 puts and about 4,000 of the SEP 22 half calls out there are the kind of the most active contracts on the tape today. Let's look really quickly. top positions out there as well. We'll just do a top 5 here. Number 5, 12,500. Oh, pretty much all Jan, the top 5 here. Jan 10 puts, 15,500. Number 4 of the Jan 11 puts. Numero Trace, 18,500 of the Jan 14 puts. Numero Dos here, 19K of the Jan 13 puts, as the Irish like to say. And number 1 with a bullet, 29, almost 30,000 of the Jan 12 puts. That's the big dog out there in UVXY. So a lot of downside on the tape here in UVXY. This is kind of like an old school VXX chart here. Jan puts. That's what everybody used to play in VXX. That paper has now spread out a little bit. We'll see if something similar follows in UVXY land now, as more folks seem to be rediscovering this product that kind of fell off everyone's radar, mine included, back in the great neutering of 2018. And now it seems like, just virtue of being one of the last of the Mohegans, some folks getting a little bit excited about it again. Mr. Meeple, I know you've been a little bit more positive of late about UVXY, despite its shortcomings. What are your thoughts here on what we've seen in UVXY this week? Anything interesting coming across your radar, sir?
No, I mean, nothing in particular, but yeah, this has been, my favorite way to express being short volatility for a while. We were actually looking at some longer dated plays today because, as I look, if you think that after the election things are going to calm down, you can put on some trades that I think have some decent edge in the longer dated. And by that, I mean like June of next year or January of next year that I think have some decent P&L potential.
And you're not worried about a repeat of another great neutering? Maybe they cut it in half again in the middle of the cycle set. That doesn't concern you?
I mean, that would be, you would hope not. And it would, for that to happen, you would really need, if that happens, they're going to be out of business. So I would say that the risks of that are relatively light.
It does seem like we're not poised for one of those anytime soon. But then again, you never know when another Feb 2018 is lurking around the corner, particularly in a year like 2020, where nothing is predictable. All models are off the table. Let's go on out to some single name vol. Still is some stuff popping off out there, even though earnings season is kind of winding to a close here. Tuesday this week, we had Slack. Obviously, Monday, markets were closed, and nothing lighting it up there. Wednesday, we had Navistar and GameStop. We'll get to them in a little bit. Thursday, we had Peloton, CHWY, Oracle, and Dave & Buster's. And Friday, we had Kroger out there. So let's see. And again, you can get these earnings move results. And don't forget about the earnings season reports out there on theoptionsinsider.com. Coming at you courtesy of our friends over there in ORATS land. Check them out. ORATS.com is the place to go for all their back testing and all the other cool stuff that they have to offer out there. Let's check out CHWY first. CHWY was on the 10th after the bell. And let's see, they were at 61.5, I should say, at the time of their announcement. They were pricing in $7. And actually, this is a move report. This is what they had going into their announcement. I take that back. They were at 61.5 at the time of this report. They were pricing in $7.17. In the past, they moved $2.47. So a little bit of extra juice there in CHWY land. Oracle, let's see, same deal. They were after the bell on the 10th. $57 is where they were trading. They were pricing in $2.52. In the past, they've moved $3.37. I mentioned that earlier this week. That one seems a little odd to me. Oracle has been tied up in this whole TikTok brouhaha. You think that might lend a little bit more vol this cycle, but apparently not. Play, of course, out there. That is Dave & Buster's, actually. They a hard business model to have going in the middle of a pandemic, kind of a high-touch business. They were at $18.44. They were pricing in $1.81. In the past, they've moved about $1.50. So a little bit extra juice out there in Dave & Buster's, maybe warranted given where we are in the world right now. And, of course, Peloton, everyone's favorite name to love or indeed to hate, coming out with their new Bike Plus, I believe it's called now. They were trading $91.17 as of the time of this report. They were pricing in $10.14. In the past, they've moved $8.31. Again, short frame of reference for Peloton, but so far, at least, a little bit of extra juice. And we know from the season report we have in front of us here as well that has not been a good play for pretty much the entirety of this season and indeed last season as well. Both of them were pretty blood red, even though this season is worse. I do believe Matt has called this the worst season he's ever seen, a blood red season in terms of premium buyers. If you're buying vol out here this cycle, it has really not worked out for you for most of the major names. You can see that broken down for yourselves and the earnings season report. Pretty much every week this cycle has come in under expectations. Week 1, 56%. So about half of the vol that was priced in was actually merited in terms of movement in the underlying. Week 2 was even worse, 52%. So that was one of the worst weeks, maybe the worst week we've ever seen. I'll have to go check with the keeper of the data to know for sure. But certainly not a good week for vol buyers out there. Week 3, 74%. So getting a little bit better, but still not that good. Week 3 is one of the busier weeks. A lot of the big names you guys like to watch, big tech names and others reporting that week, 74%. Week 4, a bit of a recovery there, 92%. So a little bit of vol creeping back. Maybe also you can argue that expectations got a little bit diminished as the blood continued. So they brought those straddles down even more, and it made it a little bit easier for them to get in line. Either way, not looking good. Total so far for the season is about a 74% in terms of actual delivered movement, actual bang for the buck versus what was being priced in on the straddle front. You can check all that out for yourselves and a whole bunch more over there. The Options Insider is the place to go. But you know what? I think it's time for you guys to take the reins. You guys have a lot of great questions. Let's get to some of those with your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, your portion of the show. I mean, it's all your show, but this is where you guys get to dictate the conversation. Let's kick it off, actually. Turn the tables on you guys a little bit. Promised you guys at the end of last show, give you guys a chance to play in the crystal ball as well. We were at pretty lofty levels in VIX and spikes at the end of last show, right around a 31, about 30 3/4 in both. So we put it out to you guys. We said, are you guys buying this ball, or is this kind of just a blip on the radar? Quick crystal ball game. Where do you think vol is going to close today? So 1 week from last week's show, we gave you 4 choices, as we are wont to do out there in Twitter. Gave you 4 ranges, really. So right around here, remember, it was about 31 when we posted that poll. So 30 to 33. Higher, so north of 33. Lower, 27 to 29.99. Or much lower, south of 27. This voting, Mr. Meatball, has been hot and heavy in this one. We were nice. We extended it all the way through pretty much to showtime today. So people coming in on the latter portion of the voting have a little bit of an edge. But it doesn't seem like it's actually changing their minds very much, which is kind of surprising and also interesting. I like our audience. They're set in their ways. So, Mr. Meatball, what do you think is winning? What do you think our audience is voting for right now, sir?
I'm going to say they're voting for the low. They were big faders this week.
You know, our audience likes to fade market rallies. They're cynical bunch. They like to bid up vol, and that's pretty much what they're doing this week. It started off that way with the early rush of voting, and it pretty much has persisted. Higher, north of 33, has been at or around 33% for pretty much the entirety of this poll. That also shows you there's no clear majority. There's no half of any of these really, or even 40%. So it's kind of spread out a little bit, which makes a market, makes it interesting. But you guys leaning, about a third of you, higher, north of 33. And it's been that way from the beginning. Even as vol drifted down this week, you guys stayed on that tip. Number 2 here is lower, 27 to 29.99, with just about 25% of the vote. Then we got much lower, so south of 27 with 23%. And here, 30 to 33 at about 18.7%. We'll get to in a second in our crystal ball how that's looking right now, as the worm seems to be turning a little bit out there. But you guys always good for a nice little fading of a rally and a bidding up of vol. And it seems like that's where you guys are this week. We'll see. We know a couple hours from now, That's an eternity in the vol space. Maybe you guys are right. We shall see. All right, next up, a lot of you guys have this on the brain. This one comes from Ingalls. Kind of vol related. It's vol adjacent, let's call it. He sent it to this show, so we're legally obligated to answer it here. He says, do you think the SoftBank whale is really the driving factor behind the late summer rally in tech stocks? We included a link to an article out of FT called How a Retail Options Craze Fueled SoftBank's Whale Trade. Actually, some interesting nuggets in this article. This is, of course, going on about Masayoshi, the guy out of SoftBank there who bought $4 billion worth of calls on a variety of big tech stocks. Of course, we talked about that before. We kind of voiced our opinion on this in the past. I kind of think of this as more of maybe almost as a bit of a stock substitution play. I believe that fund had about $100 billion in it. So they spent about $4 billion worth of premium on it. That could be a bit of a, hey, we're taking the rest of our stock and putting it to the sidelines and just get the call exposure we want out there. So if I had to guess, I think it's probably something like that. Everyone's thinking this is just a guy betting for the fences. And it could have been, certainly. These whale-sized trades, they say, are also helped contributed to this rally, particularly in the NASDAQ, in the latter days of the summer here. But other people are arguing here. They quote people in this article from macro risk advisors and others who call, they're stealing your nomenclature here, Mr. Meatball. They call it the mighty call trading legion of retail traders. They say they are the ones who are to blame for this out here. It's interesting stuff as I drill through this article a little bit, that they in aggregate, the mass amount of retail buying is going to overwhelm this whale. And that certainly is the case. That's really what's going to happen. If the mass amount of the market, they have much more buying power than even one massive fund out there is going to do. They could cause a little bit of blip in the near term. We certainly saw this back when we were on the trading floor in an individual name like Intel, where I traded out there, or in larger indices like the SPX. A customer can have their way for a while, but eventually, the market's going to dictate what happens out there. And if they're on the wrong side of it, the market's going to come in their face, and other customers are going to take that, and they're going to take that premium they're given if they're buying up calls, for example, and just sell that back in their face. So one size customer can move things for a few sessions probably, but not for a protracted period of months out there. Some other interesting nuggets in this article. The ratio of near-dated calls, near-dated options out there in retail soaring, they're saying here. Trading volumes for the calls out here. Let's see. They have the number. Goldman estimates that a fifth of all S&P 500 options, this is the second quarter, obviously, so a little bit of lagging data here, had a maturity of less than 24 hours. So daily swings for the fences or hedges out there in the SPX or maybe SPY, they don't really say which S&P 500 options they're talking about, probably the aggregate basket of all of them. That's up from 5% in the period from 2011 to 2016. That's a little bit misleading. Weeklies weren't as big of a thing in that time frame, so that's accounting for that. But still, 20% of all S&P options had a day or less to go when they traded. That's a bit of near-term paper out there. So a lot of other interesting nuggets in this article for you guys to check out outside of the whale here. Mr. Meatball, what are your thoughts on this guy's, Ingalls' allegation that this SoftBank whale was the guy really driving this? Do you think, as the article alleges, it's more retail? And what are your other thoughts in general on some of these other nuggets they unveil here in this article, like about a fifth of all S&P paper was 24 hours or less, sir?
There's a lot to unpack here. I think to start, what a lot of people that were writers don't get is that SoftBank was not Texas hedging. SoftBank was using these to actually exit their long stock positions. So when I explained it to a couple of the reporters, what I was saying is, this is actually, I know you think it's bullish, but this is actually expressing a bearish opinion. And they were like, well, I don't understand. I'm like, well, if I buy calls and I sell my long exposure, I'm essentially buying upside insurance in case I'm wrong while I'm dumping my stock. So I don't think SoftBank was doing anything that crazy, and I got completely misrepresented. This was not a Texas hedge. This was a kind of standard hedge where they unpack and unwind a big winner And just to make sure that they're, still get to participate, they buy some upside. My guess is that while they were buying all this, they were unloading way more in terms of dollars. Now, that just happened to get sucked up by market makers hedging delta neutral and by retail flow. So that's kind of the way I think that unpacks. Now, do retail, what I would say is that if you add up the net weight of every insect in the world, I believe they outweigh humans by people and animals and birds and everything else by what? Something like umpteen by like 10x, some crazy number. So yeah, an army of ants can absolutely overwhelm the market. And so I do give some credence that we have seen a reaction to order flow, retail order flow that are really one-sided. All they want is calls, which is kind of akin to what was going on in 99. This is very much feels like a replay of 1999, but, located within 5 or 6 stocks instead of 200. Finally, the daily call trading. Well, I mean, if you look at it, we now have options expiring almost every day in the SPX and the SPY. And if you look historically, if you just unwrapped for the last 25 years, how much call volume was in the final 24 hours, took place in the final 24 hours on old expiration Friday, and then kind of, expanded that to having daily expiration, you know what? I think that you would have seen some, a lot more similarities than maybe people think about. I do think that this is a really strong argument for daily expiration. Now, I don't mean daily options. I mean daily expiration. List options a month or 2 months or, 8 weeks out and have something expiring every day. I think that this kind of proves the use case for that.
Yeah, it certainly does. That gets into the danger of looking at statistics on surface value because, right, as I pointed out, the availability of daily options back in that time frame that they cite, 2011 to 2016, a very oddly specific time frame. I'm not sure why they focused on that. Probably because it looks the best for their article. But yeah, there wasn't same amount of choices just in expirations, even in the S&P, which is almost daily, as you pointed out now, than back then. So it's a little bit of an apples to oranges comparison. It's funny. You and I are both on the same page on this trade. The second I saw this whale trade getting written up everywhere, I was like, oh, that's a stock substitution. Clearly, it just has all the whiff of all of that. You see even little mom and pop retail people are doing that now. It makes sense. These levels are crazy. You don't want to risk the entire house anymore, but maybe you still want to have some skin in the game in case this madness continues. Or, keep the momentum trade going, but take your house off the table. And that seems like, to me, that's exactly what this whale trade was doing. Everyone's running with it the other way. What do you guys think? Maybe this is another flash poll for you guys out there, because there certainly seems to be some contentious issues on this. I find it hard to believe, Mark, that a reporter would misconstrue something that you say. That's madness. Heresy out there. Speaking of flash polls, you'll like this one, Mr. Meatball. We did this as the option block yesterday, but this one will probably bring a smile to your face. We were talking about crappy names out there, and there were two names that we were debating back and forth. A GameStop, I know, a perennial favorite of yours, and I almost say Best Buy all the time. Bed Bath & Beyond, BBBY. And we couldn't come to a consensus. We could on the show. We wanted to see what the audience thought. If you had to buy one of these crappy names right now, gun to your head, which would it be? Mr. Meatball, I will tell you this. It was an overwhelming consensus in favor of one of these names. Which of these names do you think our audience chose? GameStop, your perennial favorite, or Bed Bath & Beyond?
I'm going to say they went with GameStop over Bloodbath & Beyond.
Why? Why do you think they chose that?
I think that, GameStop, well, if you look at the financials, GameStop's in a way better place. I think that their shift into collectibles and things like that works. and they are, there's still a lot, and PS4 is coming, or PS5. There's an Xbox one coming out, a new Xbox coming out. I think that is going to prop up GameStop for a little bit while longer.
Interesting. You're one of the more bullish or bearish people I've heard on GameStop for a long time.
Oh, I still hate. Don't get me wrong. I still hate GameStop. All right, I'm laying out why you might, and yes, I hate GameStop. I hate Blood Bath and Beyond more than GameStop.
Wow.
If that was possible.
That's saying a lot. That's almost as much of your hate as like Darden restaurants out there. That's
Darden restaurants. There's a cacophony of bad names out there.
Or our audience actually agreed with you. The Rock Lobster and I were on the other tip. We thought Bed Bath & Beyond at least has some semblance of a business model going forward. Who knows what GameStop, you're right, they have pivoted to collectibles, but no one can go to their stores really anymore right now. And digital is the future for all these consoles. That seems to squeeze GameStop out of the very juicy secondary market that they created for themselves over the years with physical game media. Our audience clearly liking GameStop. Maybe it's a value play. It's a little bit cheaper. 82% saying GameStop. Only 17% and change saying Bed Bath & Beyond. Mr. Rock Lobster, I think, was very taken aback by that as well. He was scratching his head. Sloan Shales chimed in saying, choose Bed Bath & Beyond. The CEO is a winner from Target. He has trimmed costs like crazy and got rid of all the deadbeats. Tremendous turnaround. So, he's obviously in my camp there. You guys, I would ask you guys what you think, but you've already spoken. Clearly, it's GameStop. All right, let's get to one more here. Let's see. Quick one. Game Day. Game Day wants to know, do you think there's an audience for an at-the-money NASDAQ vol product, a.k.a. VOLQ? Talked about this before. This is, of course, the forthcoming product, a joint issue there from NASDAQ by way of CME. A little bit of an interesting bedfellows there on the vol front. And you're right, Game Day. It is pretty much taking the VIX, as I referred to it yesterday on TWIFO, taking the VIX and kind of cutting the wings off. Just back to straight up old, just at the money, please, ma'am. And that's pretty much what VOLQ is giving. Yeah, I think there is an audience for that, clearly. We've heard this on this show. We've heard a lot of professionals out there refer to what VIX does with the wings as kurtosis noise. So there are folks out there, not just Scott Nations who has a vested interest in the product, but there are folks out there who just want a very simplistic gauge of at-the-money volatility, a straddle run, if you will. In this case, through NASDAQ. And clearly there's interest in it, but I guess we'll all see when the rubber hits the road when this product is finally approved. But I do think there is an audience for just that. I mean, as you said before, I think the wings give you value. It's a question of how you incorporate that value. I think some people have taken issue, rightfully so, probably with the way the SEBO did it, and the lawsuits that surrounded it are a testament to that. But there is also interest in just that at-the-money vol. Mr. Meatball, what do you think? Do you think there's interest in straight old just the facts at-the-money vol these days, sir?
I think NASDAQ in particular is an interesting play for that because, it doesn't have that kind of broad market appeal. It's got a much more tech focused. It's got a very tightly focused use case. And I think a lot more people would be interested in, potentially isolating the gamma in NASDAQ, which is really what you can do when you're trading at the money vol, right? If you buy a straddle and then sell a vol future against it, you're truly isolating the gamma aspect of a NASDAQ or a triple Q straddle. That to me makes a lot more sense than kind of something you might do in the S&P 500. So, yeah, I think there's a use case, and we've already seen that VXN did not work. So, hey, why not give it a shot?
Yeah, the notion that it's on NASDAQ, I agree, is also interesting, too, because it's not a crowded vol marketplace like it is for the S&P. So we'll see. Hopefully these things get approved and listed soon, and we could see some actual numbers behind them as opposed to just pontificating about the future. Speaking of doing just that, it is time for that most difficult and dangerous of segments. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it's another one of those weeks where we were all almost right at any given point throughout the week here. But closing at the end of the show, this is where it counts. This is where it matters. Doesn't matter if we were flirting with my levels earlier in the week or if we're at it on another day. That doesn't matter. All that matters is right now, listeners. We have learned over the years of doing this show, the volatility space, it's a capricious mistress. It giveth and it taketh away. And it's actually taking away from me this week, but giving to the meatball coming into the end of the show. Well, it's kind of ticking away now, so maybe a little bit less. But we saw a little bit of a tick up in the old vol products. Spikes and VIX were both threatening 29 as of a few minutes ago. Now we're seeing spikes at about a 28 double, 28.55, and a VIX cash about a 28.65 or so out there. But both of those are away from my prognostication. I was feeling a little bit more vol. Remember, we were at about a 31 and change last week, and I said about 34.65. I think we're actually a little bit north. I think we're at 32 and change. At 34.65. So I thought a little bit of an uptick. And after some sell-off, and we did see the sell-off, and then we got the uptick, but not quite as much as I was looking for here. Mr. Meatball, though, looking pretty good at his 29 and a quarter. You are actually within our 1 point margin of error for victory, which is, I think, the first time anyone has been within that in quite some time, Mr. Meatball. You're about 3/4 of a point away on the VIX cash and about similar levels or so on spikes. So well done, sir. Within a 1 point, you get the winner chicken dinner this week. So you know what that means. You get to choose. You want to go first and blaze the trail, or you want to go last and carp my genius pick?
As I always say, Mark, age before beauty, after you.
Yes, that is something you always say day in and day out. I believe it is on your business card out there. All right, let's get rolling. You don't want to cart me these days. I've been a little bit upside of late, and it hasn't exactly worked, even though the week before it did look all right out there. So let's see. The end of the show, about 28 3/4 in the spikes, and about a similar level in VIX cash, 28.65 or so out there. So where we're looking this time next week, of course, we're heading into that dark period where the election vol is going to start creeping in. Also, will this sell-off continue? It's got to have some movement, a little bit of red on the screen for the near future to maintain these levels. The question, of course, can we maintain these or not? And I'm going to say a little bit north of where we are this time next week. I'm actually going to go a little bit north of where the meatball is today. He was at 29 1/4. I'm going at 29, and let's make it 29.55 for this time next week. So, Mr. Meatball, we could have some more erosion. We can't keep up this game, or we could have more juice to the upside, or we could hang out here. What are you feeling for this time next week, sir?
So I think we're going to end up lower, but not significantly. All right. I think that we could see another week of the market lower and vol lower at the same time. And so I am going to say 27-27.
Interesting. I was thinking about a 27 handle, 27-27, but I obviously went a little bit north. We shall see. Listeners, what is your prognostication? If your many votes for this week's poll are any indication, you're going to be with me. You're going to be a little bit higher out there on the vol front. Unfortunately, that music means we've come to the end of another epic journey through the world of volatility. Oh, how epic it was. We talked VIX, we talked spikes, we talked the options, we talked the futures, we talked whales, we talked single names, we talked VXX, we talked UVXY. If there's something vol, even VOLQ, for God's sakes. If there's something vol related we didn't even touch on for some reason, somehow something we missed. Could be a 5-hour show, listeners. Hit us up, let us know. We'll try to get to it on a future show. But before we go, let's go back around the horn. Let's start with the greasiest of meatballs, the spiciest of chilies, the tastiest of briskets. Mr. Meatball, sir, if folks are intrigued, they want to become a part of, let's say, the Trading Legion or the Sharp Bets or the Pit Chat or anything else you guys have cooking, where should they go? What should they do?
Yeah, I just put out 2 really interesting trades in my Volatility Edge product where we're trading VIX and spikes and VXX and UVXY and a little bit of index vol. And I put out free content constantly every day. I run up a blog. Today's my blog was about how low GBZ has gotten. If you are interested and you want to read the best
volatility-based content on the web. Come to OddsShipping.com. Give us your name and email. We'll take good care of you and make sure that you get some amazing, incredible content. And if you're interested in learning more about what we do, you can email me, marketoptionpit.com, or give us a ring.
I'll allow it. Web-based vol. Of course, if you're counting the web page for this show and a lot of people coming to the web page for Volatility Views, then maybe we have a point of contention. But outside of that, sure, the best web-based content for volatility. Check it out. Optionpit.com is the place to go. While you're searching for vol on the web, head on over to MyAxOptions.com/spikes. What can you find there? Well, of course, a cool, schnazzy 2-minute or so video on what the heck spikes is. Then, of course, you get all the data that we're talking about here on the show all day long, as well as, of course, the releases. You want to know when those futures are coming back? That's the first place to go to check it out over there, as well as links to a cool show called Volatility Views. I ask you, nay, I dare you, is there a better place to go when you want to check out some vol-oriented content, of course, outside of our friends at the Pitland? I say nay. MyAxOptions.com/spikes is the place to go. And on behalf of our friends in MyAx land and the greasiest of meatballs, and indeed myself, I thank all of you out there for downloading, for streaming, for subscribing, for sending in so many great questions. Probably have to do another whole all questions considered episode coming up. You guys hit us up with a lot of questions. Keep them coming. Remember, if you like what you hear, keep those reviews coming wherever you listen to this so new folks can continue to discover the program and indeed the whole network. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.